Hey guys, how's everyone doing? This is Nick from lunacrypto.com. Welcome to day 2 of the crypto bootcamp. In today's session, we're going to be looking at how to actually trade crypto, a few of the differences between crypto and Forex in terms of the trading side of things. I'm also going to take you through Binance and through Kucoin real quick just to show you how to buy crypto, the easiest and cheapest way to buy crypto. So when I say cheapest, I mean the less fees, because a lot of people on Kucoin or on using Kucoin or Binance will do it the newbie way, and there's often way more fees attached to doing it the newbie way because it's so simple. I mean, they direct you to the newbie way, of course they do, because they get more fees out of it, and they just make it easy. Just to click a few buttons, you've exchanged one crypto for the other, you exchanged USD for a crypto, whatever. We're going to go through how to do it the cheapest way, which is a little bit more technical, but you know, we're all traders here, so we know what we're doing. Righto, just checking my mic is working. Yeah, it is. Cool. I should have checked that at the start. Let's just get into it, guys. I'm going to dive straight into it. We've got a lot to cover today. Today's session is going to run for about 60 minutes, maybe a bit longer than that. I'm going to try and get it done in 60 minutes. So first I wanted to talk a little bit about Forex trading. Forex trading is getting harder. Over the years, it's getting harder and harder to trade Forex effectively. I realize I don't need this headset on, so I'm taking it off. So over the years, it's gotten harder and harder to trade Forex effectively. Why is that? That's because Forex more and more is getting run by bots. How was that? Going to throw my watch over the other side of the room there. It was just vibrating. Yeah, so Forex more and more is getting run by bots. So basically bots from hedge funds, from managed funds, from banks and stuff like that. This isn't the same as those like $50 or $90 per month, whatever bots that you get on those crappy websites. That's not what I'm talking about. That's not the level of bots I'm talking about. The Forex market is now controlled by algorithms. For a majority of the part, it's controlled by algorithms. So what that means is that banks and hedge funds have invested millions, tens of millions, into creating algorithms that automate much of the trading process. Automation, it's happening in all industries, really, not just this industry. So when that happens, it becomes harder and harder to trade crypto. Why does it become harder? Sorry, to trade Forex, I meant to say. Why does it become harder to trade Forex? Well, basically, and I'm just going to start these tools because I forgot to do that. Basically, it becomes harder to trade because algorithms, bots, they don't think like humans do. So going back 20 years when I started trading, one of the most effective ways to place support resistance was to place your support resistance areas at rounded numbers. These were called psychological levels. So basically, what's a rounded number on AUD USD? The 0.7500, the 0.7600, 0.7400, 0.7300. They're all rounded numbers. The big ones is like the $1 level on AUD USD, the 1.00, that's a huge rounded number. The 50-cent level, 0.50, all the way down here. It's a far way away now, but it has been there before. So that is once again a pretty huge rounded number. Yeah, back down here. Back in 2001 was the last time it was there. So those are the rounded numbers, and they used to be awesome back like 20 years ago, 15 years ago even. Psychological levels were the way to trade, or were the way to place your support resistance. You place your support resistance at rounded numbers, but bots don't care about that. Bots don't care about rounded numbers. Algorithms don't care about rounded numbers. They're machines, they're computers. They don't care. That's not what they're looking at. So when traders like us are looking at rounded numbers, it just doesn't really work that well anymore. So we've had to adapt, we've had to change, we've had to start drawing our support resistance areas differently. Now, this doesn't mean that you can't trade Forex effectively. I'm not saying that, not by any means. I'm just saying that it gets harder and harder the more algorithms start controlling the markets, the more they start putting big money in at certain places, it gets harder and harder as a human to trade the Forex market. So it's still profitable if you know what you're doing, but it's harder. You can't rely on psychological levels anymore in the Forex market. You just can't. I mean, there's countless examples of this. Look at the 0.7500 on the Aussie dollar. 0.7500 is a nice rounded number. If you were to put a sell order in here, you probably would get stopped out because it moved up quite high beyond that. And it never really moved down that much. Put a buy order at the 0.7400 psych level, it might work out. That's where it stopped at the end of last week. It might work out, but it might just continue straight down. You put a buy order at the 0.7300. It would have worked out once, then it would have failed. Fine. I mean, trades fail, but this one would have failed pretty big. The point is that these psychological levels, they sometimes work, they sometimes don't. It's much harder to draw support resistance in the Forex market than it is in the crypto market. And we'll talk about that more in a few seconds. But like, again, we go to GBP USD. I've put in all the psychological levels here on GBP USD. I just chucked them all in, the 1.400, the 1.39, the 1.38. And you can see that sometimes psychological levels do sort of work in the Forex market. They sort of work, but they're not great. The 1.3500, that's a major psychological level. 20 years ago, that would have worked really, really well. But now, just goes straight through it. There's no way you could have just placed a buy order here. Just throw a buy order in there, throw a stop loss down here, and you can make some quick profits. You can't do that. That's one of the major drawbacks, or one of the major issues we have in Forex right now. It's getting harder and harder to trade every year. Now, the difference that I noticed immediately when I started looking at the crypto market is that the charts are so easy to read. And when I say easy to read, I mean anyone with just some very basic level of technical analysis, which is probably most of you sitting in this room right now. Most of you sitting in this room right now have, oh, it's frozen. I'll see if I can fix that. Oh God, look how it froze. It froze at just like the ugliest look on my face. Yeah, this camera does that for some reason. I might just have to turn the camera off, guys. I'm sorry. Just turn it off. There we go. No camera. I can't be bothered wasting time trying to fix this when we've got a lot to cover. So, the screen isn't stuck though, right? You can see my charts moving. Can someone just confirm there's a bit of a delay of like 30 seconds or so? No, I can see my charts moving on the thing. Okay, cool. As long as my charts are moving, that's all that matters. You don't need to see my face. So, yeah, where was I? Yeah, the crypto market, immediately when I started looking at cryptos, I noticed a huge difference. I noticed that people like me and you, people who understand technical analysis at even the most basic level, you don't have to be a technical analysis genius. People who understand technical analysis at even a basic level can easily trade the crypto market, like to the point where it's child's play to trade the crypto market for people like us. And I know, it might sound like I'm talking it up, like I'm saying, it might not sound true, but trust me, I'm going to show you a ton of examples where it's just absolute child's play to pick where things are going to turn around. And of course, like with any market, you are going to get bad trades. They're not all going to be winners. You are going to get failed trades. You're never going to get 100% success rate in trading. You're never going to get 90% success rate. But the risk to reward ratio, like we talked about yesterday, and we'll talk about more tomorrow when we delve deeper into risk reward ratio. Risk reward ratio is often a lot better in crypto, and the fact that you can easily read charts and you don't have to deal with a lot of the stuff that you get in the Forex market, where you've got like a nice support level down here and boom, it just smashes straight through it, which I'm all sure you're familiar with. You don't have to deal with that quite as often as you do in this market, in the crypto market. So Why is that? It's because the crypto market is still driven by people. The crypto market is still very much driven by people. You haven't got a lot of banks and hedge funds and institutions in the market using algorithms to trade. There are more and more banks and institutions coming into the crypto market, and they will start using algorithms. But the cool thing about crypto is there is so many cryptos out there. The banks and hedge funds, what are they going to go for first? They're going to go for your Bitcoin, Ethereum, all the big boy cryptos. That's what they're going to go for. Now, you can still effectively trade as simply as I was just explaining. You can still effectively trade Bitcoin and Ethereum, but the lower market cap cryptos, and the market cap is the total current money invested in that specific crypto. The lower market cap cryptos, those ones, the banks don't even care or know about them. And they're almost completely driven by humans, by people, almost completely. There are people that have bots, but mostly they're just driven by people. And when you get an asset that is driven by people, it respects psychological levels a whole lot more. It respects rounded number. It respects support resistance regardless of if it's a psychological level a lot more, but it especially respects rounded number support resistance. So I'll take you to BTC USD just to start. Now this, like I said, there are banks, there are hedge funds, there are institutional level traders trading Bitcoin right now. So when we talk about Bitcoin, it's already starting to not respect psychological levels as much. And this one will be, in my opinion, the first to kind of turn into more of an asset like, like a stock market type, like a Tesla stock, for example. It'll be the first one to switch to that, or move like gold, anything like that. More like a traditional asset, let's say. But when you get to something like DOT, DOT is a good example of a crypto that is really big, really popular. For me, it's a blue chip crypto. A blue chip crypto just means one that I think is very safe and that I'm willing to invest long term as part of my portfolio. I've invested a fair bit into DOT. When you get a crypto like DOT, the banks and the hedge funds and institutions, whatever you want to call them, they're the big boys. They're not as invested in this. So this one is going to react a lot more to psychological levels and to support resistance. But we'll start with Bitcoin regardless, because I want to show you how well Bitcoin reacts to these levels anyway. So there's a few key levels right now on Bitcoin. The 6,700 or 67,000 rather is one of them. The 67,000 is the all-time high for Bitcoin. It was met just like 2-3 weeks ago. So that level is now a key resistance area. That level has not been hit since, but just interestingly, as Bitcoin was heading to its all-time high, it could have picked anywhere to turn around. It could have turned around at the 66,500, the 66,700, the 67,300. But where did it pick to turn around? It picked the 6,700. It's a flat, even number, 6,700. That's where it picked to turn around, because it's a psychological level and because this market reacts to technical levels. It respects technical levels, unlike the Forex market. So it's not going to react to every single one of them. So you're not going to get like a reaction at 6,600 and then at 6,500 every $1,000. It's not gonna work that well unless you're trading the very, very small time frames. There you probably do get reactions at every single $1,000 level. But there are key ones that you have to identify on Bitcoin. Another one is the 5,800 down here. We can see that after the dip, where did it stop? It stopped at the 5,800. It stopped at the key level. It did dip a little bit below that, of course. It's not always going to be perfect. And as I was just talking about with a crypto like Bitcoin, there is a lot of institutional buying on this one, so it's not going to respect technical levels as cleanly as some of the lower cap cryptos, which we'll look at soon. But if you're doing kind of long-term plays where you're trading the daily chart, you're swing trading, you can see right here that, and just by looking at this chart, how easy it would be to trade this. You could have went long here, you could have placed like a decent sized stop loss at 5,700 and 5,800 rather. And the 5,800 was a level beforehand. It wasn't just a level that was placed after this bounce. It existed beforehand. So you could have placed a buy order here at the 5,700. I'm going to drop down to, I keep saying 5,700. Sorry guys, I meant to say 5,800. I'm going to drop down to what is this? The 4-hour chart to show you a little bit more about what exactly happened at the 5,800 when it was hit. So when price got down to the 5,800, it cleanly bounced off this level. Cleanly bounced off it and then started heading up because Bitcoin respects these psychological levels. Then it did have a flash crash down, which can happen in crypto. But if you were trading this realistically, you probably would have taken some profit by this point, because from down here, if you had entered, it already gone up 6%, which doesn't sound like much, but in Bitcoin, 6% is quite a significant increase. Now, had you not taken profit, it wouldn't really matter because your stop loss is usually going to be a little bit bigger than this. So you would have been able to eventually ride this all the way up to like a nice 10% profit if you wanted to. At which point you would have exited because that would have hit that resistance area. Now, look, the point I'm trying to make with this is we have a strategy that we trade on Forex for Noobs. We trade support resistance areas. It's a pretty simple, straightforward strategy. You can move that strategy over to crypto and trade very successfully. The key difference with crypto is you don't actually even need to wait for confirmation. So I often wait for indecision to form on an area of support or resistance. I don't really need that in crypto. I don't need indecision. I'm perfectly comfortable placing my buy orders just at technical levels like the 60,000. The 60,000 is quite a big one. So I'm very comfortable placing a buy order just at 60,000. Now I'll place it a little bit above 60,000 and I'll show you an example of that. So let's say Bitcoin hits 67K and starts crashing. Now I know that it's going to stop somewhere. The most likely place for Bitcoin to stop is the big rounded psychological level, the 60,000. Once it's breached that 60,000, which was acting as resistance, it's now a support level. And now I expect Bitcoin to bounce from that 60,000. Now, of course, there are going to be scenarios where it does break below it, but like any support resistance area, it is going to get broken at some point. But what I like to do is I like to place my entries at psychological levels, at big rounded numbers, and 60,000 is a huge one for Bitcoin. So if you were to place your orders here at 60,000 on Bitcoin, let's say we place our orders, just as an example, I'll use this tool, at 60,300. Now, why 300? Because with these rounded numbers, you want to always place your order a little bit before. You want to place it a little bit before. So we could place it at 60,300. Now, the reason you want to place it a little bit before is simply because price is often going to bounce away before it. You could see an example of that here. See how price bounced away before it? You wouldn't have been able to capitalize on this reversal here had you not had your entry a little bit before, and that happens quite often. So you could place your entry at 60,300. Your targets can go just before the next resistance area, which is the 60,400. That's the next major key level. And what you're doing here is essentially you're just playing the range. Now, we do this in Forex all the time. We play ranges, we play between the levels. And this is something that you can quite comfortably do in crypto. Now, where does your stop loss go? A key rule in crypto is to place your stop loss below psychological levels. So we're here at the 60,000. We want to place our stop loss below the next psychological level, which in this scenario would be $1,000 down, 5,900. So 5,900, that becomes where we want to place our stop loss beyond. So we place our stop loss a few $100s below the 5,900. And there you go. Now we've got a pretty clean and easy, this is a daily chart, a pretty clean and easy trade with a 2.2 risk reward ratio. So you put your target a few, like $200, $300, $400 before the next resistance area. Why do we do that? because as is normal with support and resistance, it's an area, it's not a specific line. There's an area around here where price reacts, price starts selling off as it approaches resistance, buyers start getting in as it approaches support. So this is one of like the most basic setups in trading. We're just trading between support resistance levels. I'm going to drop down the time frame a little bit just so you kind of more cleanly see what's going on here. So 63,500, that's a pretty good place to place your target. Now you might be thinking, well, yeah, you know, it's very convenient that you would set your target here. Why didn't you put it 300 below the resistance area? It would have got missed then. But there is a reason for that. I'm not just placing it here because I'm showing you an example and saying how good this trade would have been. It would have been placed there because when you drop down to the 4 hour, you can clearly see that on its way down, it bounced up and it didn't quite get to that area. So now we know that this resistance area, the 6,400, the 64,000, I keep saying 6,400, I'm sorry, I mean 64,000. The 64,000 level, we know that this is a resistance area, but we also know, because we saw here on the 4 hour chart, that price bounced away before it. So we know that when price reapproaches, it'll probably bounce away a little bit before, and we want to place our target before that. So it's just like a little key thing there that you have to keep an eye on. Drop down to the smaller time frames and see, you know, where that resistance starts, because it's the 6,400 is a nice round number, but sometimes it's going to bounce away before that. So boom, we've got that. We set our entry about $200-300 before the 60,000, because we want to get in just before it touches that area, because sometimes it's not going to quite touch it. We place our stop loss at below the 5,900 because we want our stop loss below the next psychological level. Psychological levels are just rounded numbers: 60,000, 59,000, 58,000 psychological levels. We place our stop loss below. Why do we place our stop loss below? Because it's a barrier. A psychological level acts as a barrier for price. When price approaches that psychological level, it's likely to bounce away from it. So we want to place our stop loss beyond barriers. So we get our entry at 60,300. We get our target just before, because we've seen that bounce there. So we want to place our target just before the next resistance area, and we place our stop loss there. And we got this trade that's like a nice 2.1, 2.2 risk reward ratio. Not bad at all. It's a very, very simple trade. So this would have been repeated multiple times. You could have entered, obviously you could have entered here, you would have got stopped out. You get stopped out sometimes. There's never going to be a case where it just works out 100% of the time. So you get stopped out, of course, that happens. You could have entered a trade here at the 5,800, or you could have just kept repeating, entering your trades as it drops down to the 60,000. And you could even do that right now today. You can buy some Bitcoin today. Looking pretty bearish right now, but this would be just another example of a trade. You could start buying some Bitcoin now and set your stop loss below the 5,900. Set your target up here, and very, very simple stuff. It works really, really well in crypto, this kind of stuff. Now, you could also do that on the short side. You could sell resistance. You could see here that had you put a short entry in there, or you could also, once your long is closed, you can open a short trade. That's another thing. But you could short from resistance up here, go in short, boom, easy. Because right now Bitcoin is stuck between the 64 and the 60,000. So once it hits the bottom, it tends to turn around and go back up. And it's a pattern that repeats itself over and over in crypto. You get these ranges between these levels, and they're just so easy to play. So I'll show you another example of how easy it is to play these levels in crypto. We'll stick with the 4 hour chart. Now, you don't need to trade these on the 4 hour chart. You could just do it on the daily, but the 4 hour chart gives you that little bit more information, so it's a little bit easier to trade. So this is DOT. It's a very, very popular crypto. I love this crypto. And this one is so simple to trade. I'm just reading the chat. you can trade on exchange. We're going to talk about how to buy these cryptos later in the webinar, guys. We're going to talk about how to buy them. I'll show you how to buy them on exchanges. And for those of you who just want to trade, we got a link to our preferred broker, and through that broker, that's just like MT4. You could use our MT4 through that broker, but also they're doing integration with TradingView soon, so you could trade right from your TradingView charts, which is awesome. But yeah, they're going to have integration with TradingView, and for now you can trade through MT4. I'm not going to show you how to trade through 8cap, the broker, because everyone here knows how to do MT4, MT5 trading. Well, almost everyone, because I'm sure most of you here, being from my Forex website, have experience with basic trading. Right, cool. I'm going to stop looking at the chat and I'm just going to keep talking. So DOT is another great crypto to trade. DOT has had a pretty crazy run up. If we go to the daily chart, we'll see that if you were a buyer of DOT, this is more from a long-term investment standpoint. If you were a buyer of DOT, you would have got in like at $28. It's now worth $50. But if you were buying DOT when I first said to buy DOT, which was sometime like probably, I think I first said to buy DOT in March. In when I first started really talking about cryptos, I first said to buy DOT in March, which actually would have been around here, which would have been 100% up right now. But I really think that DOT is going to go a lot higher than this eventually. I'm really, really bullish on this crypto. But going back to more of a short-term trading perspective, and not the long-term investment side of things, as DOT was climbing up, it basically turned around at a psychological level, the 55 level. Now, this is another cool thing about cryptos versus Forex. With Forex trading, when price starts venturing into a new high, an area it hasn't seen before, it's going into all-time highs. GBP/USD going to all-time highs, for example. I know it hasn't done so in a long time, but I'm just as an example. So when it starts venturing into all-time highs, then you're basically at a loss as to where support resistance is going to form in the Forex market. You don't know where support resistance is going to form. You have to wait until support resistance forms in order to start getting an idea of where to trade. But see, in crypto, it's different. In crypto, you can reliably predict that when DOT breaks all-time highs and starts flying up, that it's probably going to turn around at the most logical and most rounded psychological number, the $50 mark. Now, the $50 mark is where it originally turned around. It didn't turn around there for long. So you probably, if you got into this one, you probably would have ended up with a failed trade. Cool, no problems. The next level, 55, because the key psychological levels we're looking at on DOT are 50, 55, 60, 65, 70, 75. So we place an entry. We could place a short at the 55 level, just a little bit before it. Just a little bit before it. We know it's venturing into all-time high territory. We place our entry a little bit before, place our stop loss above the next psychological level, the minor one, which is 56. 56 is a nice psychological level. And then your target could go to the next major psychological level, which is all the way down at the 50. The 50 mark is here. Boom, you place your target just a little bit before the 50. Now, this is just such simple stuff. And I know you might be looking at this thinking it's too simple, but that is the key to crypto trading. It is too simple. It is so simple for someone who understands basic technical levels. This market respects technical levels like support and resistance, psychological levels, so well that it is child's play to trade. This is what attracts me to this market. And it's because it's driven by people. People care about those numbers. When people see it going up, they think it's going to stop at 50 or 55. They place their orders around there, and because they place their orders around there, it stops at those levels. That's where it slows down. So This is, yeah, like I said, this is a very, very simple, straightforward trade. Dot breaks into all-time high territory. It's climbing like crazy. The first place you expect it to turn around is the $50 level. It did briefly turn around at the $50 level, but it would have been hard to make get a profitable trade on like the 4-hour chart. Now, if you were down on the 15-minute chart, for example, you might have been able to catch a pretty nice trade on Dot because you're doing more scalping style strategy. But if you're on like the 4-hour, more of that swing trading style, the day trading kind of thing, but 4 hours verging on swing trading, probably would have had a failed trade here at the $50 level. But if you're afraid of failed trades, you can't be in this business. You can't be trading. But that's fine, no problem. $50 didn't work out. $55 next one, and $55 would have worked out really, really well. Now, where is it stopping? Where is it stalling today? It's clearly stalling at the $50 level, the psychological level. Is this going to hold? I'm not saying it is, but if anything's going to hold, it's probably going to be this this $50 level. So yeah, that's just an example on Dot, and you could follow this all the way down to like $45. See, $45 on Dot, you could see that it reacted for quite some time at that level, bouncing away from it. The $40 level, once it broke above it, you could see it just kept reacting to it. It did spike a fair way below there, but sometimes it's going to spike a fair way below. It's not always going to be perfect, but it reacts cleanly at those levels. And like any type of trading, it's not always going to be perfect. If we go down to the 35 level on Dot, we could see the first time it hit 35, reacted very strongly. That would have been an easy trade. Second time it hit 35, it went right through it. If you were trying to trade that, you would have had a failed trade. But as I always say, failed trades are part of trading, and it's not always going to be perfect for you. But yeah, it would have been a failed trade. But the thing is, most times it works out pretty well on trading crypto, and it's so easy to read the charts. There's no complexity. I have a theory with crypto, and I call it underthink. Underthink. The more you underthink in crypto, the better your performance. So basically, the less thinking you put into trading crypto, the better your performance. So what do I mean by the less thinking you put in? Basically, if you look at a chart, and if you look at a Forex chart, you have to think a lot about what you're doing. Where's this support resistance area? But with, and all kinds of questions you would ask yourself, where am I going to put my target? Where am I going to put my stop? But with crypto, it's easy. The less you think, the better. All you have to think when you look at a crypto chart like Dot is $55, $50, $45. Simple, very simple. Enter short at 55, exit just before 50. It's just like very, very simple thinking, underthinking, because overthinking is bad, and the complexity that comes with trading Forex leads to overthinking. But and you might be used to overthinking. You might be looking at your charts, used to overthinking things. It might be perfectly natural to you to overthink things because you're coming from a Forex background. But really, in crypto, it pays to underthink. Just try and keep it as simple as possible. So I'll take you to another example. This is Cardano ADA. Now, if you wanted to short ADA, the best absolute time to short ADA was when ADA hit $3. It pushed to all-time highs. There was a lot of news surrounding this crypto. Shorting ADA at $3 would have been the best possible short you could have made. It would have went all the way down. And where did it stop on its way down? Where did it stop? It closed the day at $2.50, another rounded psychological number. What I'm talking about is, just to be clear, this candle here. So when it really, really started dipping, it closed the day at $2.50, which means it got stuck at $2.50. But when it crashed, where did it turn around? $2. Bang on that psychological level. Think about it. It could have bounced from anywhere. It could have bounced from $2.10, $2.205, $2.07. It could have bounced from anywhere. but it bounced from $2. Why did it bounce from $2? Because there was a lot of buy orders here. A lot of traders placed buy orders here, and it was inevitably going to bounce from $2. So if you saw this dipping and you placed your buy orders at $2, you could have got into ADA and rode this back up to $2.50 very, very easily. Now, it would have been a scary trade to take, don't get me wrong. I mean, this was dropping fast, and you would have had to kind of have nerves of steel to say, I'm going to buy at $2. But you could have done, and I'm just showing you how it respects technical levels. There was another instance where it dropped back down. You could have bought here, went in long. That would have been an easy trade. Because let's say you bought just above the cycle level. Put your stop loss at like $1.88, something like that. Because you want to place your stop loss. I know that looks like a very convenient stop loss just below the wick there, but it's probably where I would have had my stop loss, because I want to place it just below the next cycle level. So we got $2. What's the next minor psychological level? Well, of course, it's $1.90. That's our next minor psychological level. And where did it bounce from? It bounced from $1.90. Very, very exact. It bounced from the psychological level, which is $1.90, which is why we place our stop loss below that psychological level. Place your stop loss at $1.85, $1.86. It's just below that psychological level. Place your target just before the next resistance area, the next resistance level, which is the $2.50. And you would have got like a free R on this trade. Honestly, you wouldn't even have had to place your target that high. You could have placed your target significantly lower. 2.5 R. Very easy, very simple stuff. And then ADA got into this really tight range for some time. It eventually dropped down and crashed through. If you were getting into a long trade here, it would not have worked out as well as the first one. But once again, you know, I like to show you trades that work and trades that don't work, because it doesn't always work out that well for you. Sometimes it's going to fail, but you know, that's the reality of trading. So all the cryptos that we've talked about so far today, these are all high market cap cryptos. They've all got a large market cap. And what do I mean by a large market cap? Well, I could show you actually what I mean by a large market cap real quick by going to a website that I introduced you to yesterday, which you probably might already know if you have spent any time in crypto, CoinMarketCap. CoinMarketCap is a crypto that, a website that lists all the cryptos out there, almost all of them. So on the homepage of CoinMarketCap, they list the cryptos, and they show in order of market cap. Market cap is the size of the crypto, how much money is invested in the crypto. So right now there's 1.142 trillion invested in Bitcoin, which is an absurd number, but it's there. 500 billion rather invested in Ethereum, 100 billion in BNB, which is another crypto that I haven't talked about, but that's another easy one to trade. Solana, 73 billion, loads and loads of money. So when I say we've only talked about the high market cap ones, we've talked about ones that have like billions and billions invested in them, right? We talked about ADA, 65 billion invested in it. But now let's talk about one of my other favorites, PYR, PYR. PYR is a pretty cool crypto. It's a gaming crypto. I think it has a huge future ahead of it. I think this is going to potentially be one of the big ones. But what is the market cap of PYR right now? 371, let's call it 372 million. So this is a low market cap crypto. 372 million versus the billions that these other ones we looked at are worth, or the trillion that Bitcoin's worth. It's a very low market cap crypto. So the cool thing about low market cap cryptos is that they are driven more by people than Ethereum is, for example, or Bitcoin is. Bitcoin is driven a lot by the institutions, which already makes it a little bit more dangerous to trade. Whereas something like Vulcan Forged PYR, this is a trade that we've shared in the Discord group back when it was, and I talked about this yesterday a little bit, but I think it was first shared back when it was like $9 or something, or maybe even back when it was $7. So this one is way, way, way up. It went up 250% at its maximum. But this is almost completely driven by people. It's a $300 million market cap. It's driven by people, and therefore it respects psychological levels really, really well. So there, if you look at this chart right now, the psychological levels for Vulcan Forged, I'm just going to call it Pyre, for Pyre, psychological levels are right now $18 and $24. It would be nice if it was $20 and $25, the more rounded numbers, but that's not where it ended up. It ended up being at $18 and $24. Sometimes that's just how it's going to work out. So $18, $24, those are our psychological levels. We learned that because price started bouncing from it. So now that we got psychological levels set up on this pair, we can see. Actually, let's switch back to. Let's maybe go to the 12-hour. We'll switch back to the daily for a second. So we can see that this psychological level has been very, very well respected for days in a row now. For days in a row. After it was set, which was on this day, it has been very well respected for days in a row. Right? So this is lagging a bit. So the way we trade, or the way I trade small market cap cryptos, is slightly different to the larger market cap cryptos. The way I trade these, it's slightly different, but it's mostly similar to the way I trade the larger market cap cryptos. So still place my entry at like, in this case, $18.30, let's call it. Just a little bit above that level. Still place my stop loss below the next psychological level. So $18 is a psychological level. 17 is the next rounded number below it. Place my stop loss at $17, just below $17 rather. Then I place my target at 2R. So that's two times my risk to reward. So sorry, 2 times my risk. So if my risk is here down at 1670. My target is just 2 times the risk. Now, this is usually what I go for on these kinds of cryptos, just a 1 to 2 risk reward ratio. So you can see that depending on your entry, depending on a few factors, you could have had quite a few successful trades here. Look where previous daily closed. I'm just taking a quick look at the chat. I'm not sure what you mean by look where previous daily closed. Lewis, no, one sec. Just here is a link to the Discord group. The website lunacrypto.com is a pretty small website right now. There's not much information on it. Just if you want to trade with us, just go to the Discord group. Discord group is where most of the action is right now. Anyway, sorry, getting back to this. So yeah, Pyre, Vulcan Forge Pyre, boom. We place our entry. This is very laggy today. I'm sorry, guys. I'm having a lot of trouble moving this around. We place our entry order just before the cycle level. We place our stop loss like at 1680, 1670, just below the $17 mark. We want it just below that by a little bit. And then we place our target at like 2R. And close enough. So we can see here that depending on your entry, depending on your stop loss and stuff, you might have missed target yesterday. Totally possible. For these 2 trades, you would have ended up hitting target because they would have dipped down to that psychological level. They would have hit it and they would have shot back up, hitting your target. Now, I didn't take. I don't think I took. I didn't actually take this one. I don't think. Or no, I didn't take this one. Sorry. Yeah, this was the one I didn't take. So depending on where your target was in this case, it might have just been missed. It totally depends on where it was. But you can see that price has reacted very, very nicely to this psychological level, the $18. And if I take your attention to where did it actually stop when it dipped down really hard, it dipped down really, really hard. Where did it stop? It could have stopped anywhere, but it stopped flat bang on the $17 level. That's why we place our stop loss below these psychological levels. It stopped on the $17 perfectly. That's why our stop loss is at 1680, 1670, something like that. Because it drops down and it stops at the 17 perfectly because it respects psychological levels. This is a level, this is something you don't see in the Forex market anymore. You don't see, it's not that easy to place stop losses. So you find yourself getting stopped out of trades because they dip below where you think is a safe place to put your stop loss. And then they turn around and go up in your direction and you would have won the trade. So you find yourself wanting to set a wider and wider stop loss, but that heightens your risk. But you don't get that in cryptos, which is why it's such a cool market to trade. You get it respecting psychological levels a whole lot better. So you want to place your stop loss below psychological levels. And yeah, your target's price just jumps up and hits your 2-hour target. With these lower market crap, I think I just said lower market crap, I'm sorry. Lower market cap cryptos, you want to have a 2-hour risk to reward ratio. With the bigger ones, you can be a little bit more liberal with your risk to reward ratio. You can push it up to the next resistance, but the lower market cap ones, they tend to be a little bit more reactive. So yeah, you can be just a little bit more sensitive with your take profits, a little bit more safe with your take profits, rather, not sensitive. I don't know where that word came from. So another thing is, as this pushes up into new areas that haven't been seen before, we need to start placing new support resistance. So it's becoming quite clear to us right now that $22 is a pretty important level on Pyre. It wouldn't have been clear to us when we first started taking these longs from down here. Wouldn't have been clear to us, but now we know that $22 is a significant level on Pyre. So now we can just start trading between these two levels on Pyre until it breaks up and starts pushing up. And why do we know $22 is a significant level? Because number one, it's a psychological level. It's a nice rounded number, $22. And number two, we're seeing proof from the candles that they are, for the last few days, stopping near to the $22 level. And yeah, Naka is yet another one where look, guys, we're running out of time, so I'm not gonna show you guys the charts anymore. This all seems very, very basic, but that is the reality of trading crypto. It is very, very basic. We're going to be talking more and more about a trading strategy, and I'm going to be doing YouTube videos on more specifics on how I trade, more examples, posting it to the Discord group. I'm going to be talking about it a lot more, how to play these levels. I'm just doing a kind of a run through it to kind of give you an idea of the potential in crypto right now. But I'm going to go more in depth into the strategy in future YouTube videos, future webinars. It's just we're limited on time, so I'm going through the best I can. Now, I quickly want to show you how to buy and sell cryptos, but we have 10 minutes left, so I'm going to get through this as quickly as possible. Now, I need to just hide my screen for a second. It's going to go black. I'm hiding my screen because I'm opening up my Binance and my Kucoin, and I just want to be sure that there's no sensitive personal information shown while I open these up. Okay. And after I do that, I'm going to re-reveal the screen. So here we go. I'm logged into Binance right now. This is my Binance. I'm going to show you. I don't know why it's suggesting Australia. That's weird. I'm going to show you now that everything's on the screen. How to buy coins, cryptos, the simple way through Binance. When I say so, not the simple way. How to do it in the more complicated way, but the cheapest way. The less fees you can pay. So once you're inside of Binance, which I gave you guys a link to it yesterday, you could have opened up an account. And if you haven't already, just watch yesterday's session. You're going to see stuff like buy now, buy and sell cryptos in minutes. And then most newbies are going to click that button. They're going to get to this page and they're going to see euros or, whatever currency you want. And it's going to let you buy cryptos. And you're going to be like, oh, that's nice and easy. I bought crypto. But they charge a bit more fees this way. The way you really want to do it, is going to the spot market on Binance. So in order to get to the spot market, you go to Trade, Classic. You can also go to Advanced, but it just depends what you want to do. I usually use the Classic version. The Advanced version is just a little bit more complicated. It has stop limit orders, which we won't go through stop limit orders today. They're kind of a bit complicated. We don't have that much time, but we'll cover them at some point, and I'll make a video on stop limit orders and I'll put it in the Discord group. But yeah, we'll stick with the Classic one for right now. And I'm going to buy a crypto right now for you guys. Well, not for you guys. I'm going to buy it for me. Not going to spend too much money. So I'm going to buy Sand. Sand is another gaming crypto that I'm quite bullish on. It's one of the big boy gaming cryptos. I think it's got like a $2 billion market cap or something along those lines. So it's a very big gaming crypto. It's a metaverse crypto. I'm not going to drone on about what the crypto is. But once I'm in this interface, I want to buy my crypto. Now, I go to the top right-hand corner. I put in Sand. Now, depending on what I currently have stored in my Binance, if I have BUSD, if I have USDT, and these are just things that you can buy. You can buy BUSD through that. You know what? I didn't really think through the part where I needed to show you how to get BUSD. So Euro, USDT. We'll start with that. Let's say you put euros on Binance. So you open up Binance, you put euros on it. I'm not going to take you through how to do that. That's pretty straightforward. You put euros on Binance. You then come to the spot market and you put euro/USDT. You click that, and you can buy euro. You can sell your euro for USDT. So you're basically selling your euro for US dollar stablecoin. USDT is a US dollar stablecoin. We talked about this yesterday. A stablecoin is just a coin that has a one-to-one relation, or it's tethered to the US dollar. It's tethered to the value of the US dollar. So one USDT is always worth one US dollar. So you can come into this interface and you can exchange euros for USDT. The reason you want to exchange euros for USDT is this is one of the most popular stable coins in Binance, and this stable coin is paired with pretty much every single other crypto in Binance. So if you want to buy Sand, like we're going to buy in a second, you can buy it with USDT. If you want to buy any crypto, you can buy it with USDT. So I'm going to go ahead and buy some Sand. I'm going to select Sand BUSD. BUSD is yet another stable coin. I don't have any USDT in my account right now. Maybe I do. But I know I have BUSD in my account, so I'm just going to use BUSD. But if I wanted to use USDT, it's the same thing. You just click USDT, you click BUSD. If you want to buy with Bitcoin, you just click Sand BTC. See that? Sand BTC. If you want to buy it with BNB, you click Sand BNB. I want to buy it right now with BUSD, so I'm going to click that. Hopefully that makes sense. Right, so next, once I've selected the right pairing, which is also displayed up here, SAND BUSD, I want to buy SAND with BUSD. Instead of using limit orders, the easiest thing to do is to use market orders. You click market down here. So you want to be sure that you've clicked market, which is this little button here. So now you're on the spot market on Binance. You've selected the correct pair, which was step 1, SAND BUSD. If you have USDT, you can select SAND USDT. Select the correct pair, you select market, and now you just want to put in how much of it you want to buy. So you could put in how much you want to buy in BUSD, which is a stable coin. So that just means if I put 100 here, that means 100 US dollars minus the fee, which is about 8 cents. 100 US dollars. That's how much I'm buying. BUSD is basically US dollars because it's a stable coin. Or alternatively, you can click total, you could click amount, and you can select the amount of SAND, the crypto itself that you want to buy. Let's say you want to buy 10 SAND. You can do it that way. I usually just keep it simple and just go to the BUSD amount. So I want to buy 100 BUSD worth of SAND. I click buy SAND. Boom, done. That's it. I've just bought that crypto. So the only missing step here is a step I should have thought about before doing this webinar, thought about teaching you, was a step where you convert your fiat currency, which you've put into Binance. So let's say it was the euro, just for example, you convert your euro to USDT, so then you can buy stuff with USDT. But it's the exact same process. If you have euro, USDT, you just click that, you make sure that you're on the right pair, because it's listed to the top left here. You make sure you're on market because it's listed there. And this time, I don't have any euros, so this isn't going to work for me. But let's say I want to sell 100 euros and get USDT, get the US dollar stablecoin. Stick 100 euros in there, click sell, and it would work. It's just not working because I don't have euros in my account. And the same goes with GBP USD, for example. GBP USDT. I have 100 GBP in my account, which I don't, because I don't really keep much fiat in here. Sell GBP, I would be purchasing with GBP 100 GBP worth of US dollars. Or alternatively, I can select total and say, I want to buy 500 USDT, US dollars, for GBP, for however much GBP I have in my account. You'll find a lot of times that the rates here are way better than any other currency exchange website and way better than your bank offers anyway. The conversion rate between the pound and USDT is better on Binance, which is kind of crazy. So once you've got funds in Binance, which I can't show you exactly how to do because then I'd be revealing personal information, but we'll find a way to explain how to do that, and we'll find a way to explain to you guys how to do that, but it's really straightforward. Binance makes it easy for you to put in some money because they want you to do that. So putting in money is really straightforward. I mean, honestly, you could just it'll show you exactly how to do it. I'm not gonna get into that side of things, but once you've got the money in there, I've shown you how you can convert that money into crypto. So once you got that money in there, the first step is change your euros into USDT, or change your GBP into USDT, change whatever it is to USDT, put it in there, and then once you've got USDT, you can buy whatever crypto you want with it. You could buy SAND USDT by swapping it. That is the non-newbie way to buy cryptos on Binance. Now I'm going to quickly take you over to Kucoin. I'm just going to hide my screen again, make sure there's nothing personal on there. All right, there we go. I'm on Kucoin. Kucoin's very, very similar stuff. You click trade, you go to spot trading. Once you're on spot trading, it's going to ask you to input a trading password. I'm just going to hide my screen once again to input that password, but that's very straightforward stuff. You're literally just typing in your password. And now that that's typed in, we can see that we are on Kucoin. What crypto can I buy today on Kucoin? What's the VRA doing today? VRA is very nicely sitting at the 70 support level. You know what? I'm very bullish on VRA. I think it's a great crypto. I'm just going to buy like a few $100s worth of VRA right now to show you guys how to do it. So very, very similar to Binance. All these interfaces for these exchanges look very, very similar. Now, I'm going to get more into how to do advanced orders in future videos and stuff like that. I just want to show you basics today. It's a boot camp. It's a basics boot camp. We can't get too complicated on these things. And we're at our 1 hour mark. So I'm going to quickly show you this and then wrap up here. So I'm in Kucoin. This is the other exchange we suggested you sign up with. I'll close that right now. And to get VRA up on Kucoin, click this, type VRA. Then I'll see two pairs, VRA BTC, VRA USDT. This means that I can exchange BTC for VRA or VRA for BTC or USDT for VRA. I don't hold any BTC in Kucoin. I only have USDT, the US dollar stablecoin. So I'm going to click VRA USDT. That presents me with a chart. I then come down here to the bottom right-hand corner, this section here. And once I'm in the bottom right-hand corner, I just click market, boom, done. And now I put in the amount I want to buy. I'm just going to buy like, I don't know, $500 worth. 500 USDT worth of VRA. Also, these buttons will allow you to put like as much money as you want in there. Like if I click 100%, it'll put all of my USDT into VRA. It won't do it instantly. It'll just fill up this box and then you into VRA. It will fill up this box and then you click buy VRA and it'll buy it for you. But I'm just going to buy $500 worth right now. 500 USDT, click buy VRA, and it tells you you've successfully placed the order. You're done. That's it. Now, this is Binance. This is Kucoin. If you want to trade through 8cap, the broker, that's just like MT4. It is MT4. They have MT4. They have MT5. Eventually, they're going to have TradingView. We'll make guides on how to trade through TradingView once we get our hands on that cool feature. But for now, it's MT4, MT5. You guys already know how to do that. Now you have like a basic idea of how to buy cryptos on Binance and on Kucoin. After you've put money in there, you have a basic idea of how to do that. We'll be doing more videos on some more advanced stuff around Kucoin and Binance. Just the problem is with these platforms, there's a lot of personal information on Binance about me, how much money I have, how many cryptos I have, and I have to be very, very careful with that information. So I can't just like give you a full tour of Binance. I can't just open up another Binance account because you have to verify your identity. You have to do all that kind of stuff. So it's hard to do content showing you how to properly use the platform. We just have to think through how to do that. But stuff like this, where I'm just showing you how to use this interface at a basic level, that's something that we can easily do. So what I've just done to wrap up is I bought VRA and BTC. VRA and Sand. I don't know why I said BTC. I bought VRA on Kucoin. I bought Sand on Binance. I don't really care if these go up. It's only $600 that I put in there. It's that sounds a bit pompous. I'm sorry. I didn't mean it to sound that way. It's just for me that's not a huge amount. So I just put that. I do believe in these cryptos, mind you. I do believe that they're good cryptos. I wouldn't just put money in some crappy crypto. I believe that VRA is a long-term great hold for a crypto. I believe Sand Probably won't go up a whole lot. It's probably not going to do it 10 times, but I believe it's a good crypto. But yeah, I just put a few $100s in there to show you guys. I'm going to quickly hide my screen again, and we'll wrap up for today. But I'll just quickly take you guys to VRA. So VRA, we want to add the Kucoin feed. Kucoin plus, boom, done. So I'll take you guys to VRA, quickly show you, give you a bit more insight into what I bought. Again, we're just, this pair just respects technical levels. So we can see that this one's a bit annoying. It's like 0.07, so it's 7 cents per coin for this one. So it's a little bit more annoying to read, but the psychological levels are there. Yeah, so I'm just buying down here at this psychological level. So this is the sort of trade that I'd be willing to take on a normal, in a normal scenario. I just bought literally right now, so I bought it around that level. My stop loss would go, because this is the 0.70, so I'd want to place my stop loss at the 0. In this case, yeah, I could place it down here below the 0.60065. It's another rounded psychological number, and my target is just going to be 2R, which are kind of nice that it's just below that peak that was formed there. So this would be the kind of trade I would take on VRA. Now this one could take several days to play out. VRA is not the most exciting and fast moving of cryptos, but it's a very good crypto. So yeah, and the sand trade I took, now that one was a bit more, I didn't really look at the chart that much on it, but similar case, I probably, it's hard to say, I probably wouldn't have entered this one. Just because it's moved up a fair bit, but sand is sitting like at another psychological level, $2.50. $2.50 is a nice rounded number, nice psychological level. So where did it bounce from? Literally any chart you open on crypto, it tends to bounce from psychological levels. Came down to the 250 and is starting to move away from it. It's just so simple and straightforward. So I've just bought sand now. I only bought $100 worth, so it's not a huge deal. Ideally, I would have bought lower. I would have set my stop loss below the $2.40 because that's the next psychological level down, 250, 240. Place my stop loss below 240. Risk to reward ratio minimum of 2R, but this is a high market cap crypto, so I wouldn't mind extending it a bit further. But yeah, that's pretty good, like right there. Unfortunately, because I bought this here, the numbers are not going to be quite as good for me, but it doesn't really matter. I was just buying it as an example. All right, I'm going to answer a few questions real quick, and then we'll wrap this one up. Can I sell USDT for euros? Yeah, you could swap them back and forth. You can swap them back and forth at any point. If you want to take euros out of Binance, you can sell whatever crypto you want for euros. Now I know we keep talking about euros. It doesn't necessarily have to be euros. The problem is, I'm not sure if you can get USD on this Binance. You might have to go on Binance US to get USD. I'm not sure. Yeah, so you can't get US dollars. So for all you Americans out there, sorry, but you might have to be on Binance.us, not Binance.com. But yeah, if you were to go to Euro USDT, you'd see here that you can sell Euro for USD, or you could buy Euro with USDT. If you were to go to, you could also do the same with BTC, I believe. No, you can't. Never mind. Some exchanges will allow you to do that, but it seems like Binance doesn't let you do that. But they have SHIB Euro. I know, you know what? They probably have BTC. I don't normally do these kinds of exchanges. I normally just buy with USDT. But yeah, they have BTC Euro. So you could just straight up, you don't even have to change it to USDT. If you wanted to buy one of the bigger cryptos like BTC or like Ethereum, you could do so with euros. But if you wanted to buy one of the smaller ones like Sand, you can't buy that with euros. These are the only pairings that are listed there. So you have to switch it to USDT first. But if you wanted to buy an Ethereum, for example, Ethereum Euro, that pair exists. So now you just open up Ethereum Euro. You can buy ETH. When it says buy ETH, you're buying ETH with euros. Straightforward stuff. Binance is not banned for UK residents. I'm in the UK. I'm a resident. I'm in Binance, and I've just purchased crypto right in front of you. Daniel, is there a place to put TP and stop loss? Yeah, you can put that with your stop limits, but we can't go over that today. I'll do a video on stop limits, how they work. They're quite complicated, but you have stop limits. One cancels out the other. So if your stops hit, then your take profit is cancelled. If your take profits hit, your stop's cancelled. But like I say, it's very complicated, so I'm not going to go through it today. This is about the basics. I'll be doing a video on it and just sticking it in the FAQ section of the Discord group. So just get on the Discord group and it'll be there in coming days. Matthew Smith, how are you using your stop loss in practice here? Well, like I was saying, the stop loss is used just like I was showing you guys on the charts. Even if you're not trading with margin, you put in, with leverage or whatever you want to call it. You put in $1,000 and you put your stop loss. So if I put in $1,000 and I put a $300 stop loss, then my risk for that trade is $300. Because like I put in $1,000 on Bitcoin, just as an example. I put on $1,000 on Bitcoin. Oh wait, was I hiding my screen again? I was talking through. Oh God, no one told me. God, I feel like an idiot. I was just explaining a bunch of stuff, showing you guys, and my screen was hidden the whole time. That was stupid of me. What I was trying to show you guys is, look, ETH Euro. You can just stick ETH Euro in there, and boom, it appears. You can stick BTC Euro in there, boom, it appears. So you can sell euros for BTC back and forth. But if you were to do one like Sand, right there, do one like Sand, you can see that there's no euro listing. So for a crypto like Sand, which is smaller, you need to switch your euro for USDT first, and then buy Sand. So all you have to do is put in the crypto you want to buy, and it'll give you all the pairings there, and then you have an idea of what you can do. Yeah, Matthew, to answer your question, let's say I buy $1,000 worth of Bitcoin. I could set my stop loss to like wherever I set my stop is how much I'm going to lose of that, if that makes sense. Wherever I want to close out is how much I'm going to lose of that. So on something like Sand, if my stop loss is there, that means I'm going to incur around about a 10% loss. If I put in $1,000, I'm going to lose 100 when I sell it, because I'm going to sell it for $900 essentially. But well, no, I put $100 in there. So let's just say my stop loss here would be roughly $10. My target would be plus 20%, so plus $20 in this example. Blur, as I've just said, I can't show you an example of how to set up stop losses. This is a basic webinar. It's a very complicated thing to set up a stop loss on Binance. We'll be doing videos on that in future. All right, guys. I've taken you through the basics. Tomorrow we're going to be discussing more about portfolio management and stuff like that. Your portfolio will maybe get into stop losses and stuff tomorrow, because tomorrow is more about risk management. I'll see if I can get that in there. Otherwise, I'll be doing an additional video on stop losses and just sticking it in the Discord group on the FAQ section under a question: how do I place stop losses on Binance? But it's way more confusing to place a stop loss on Binance than you would think it is. So it's not something for today. Sorry that the screen was hidden. I forgot to unhide it. I don't know how much we missed there, but I hope it wasn't that much. Yeah, thank you guys very much, and I'll see you guys tomorrow.